Hey guys, so we're back here at Bitcoin Atlantis. I'm here with Lyn Alden, great macro analyst and obviously really into Bitcoin and obviously doing her part to help educate people about Bitcoin. Now Lyn, I know you had a great meme recently, which was the classic mid-curve meme, and on the the grug brain side, the left curve and the right curve, the galaxy brain, were both Bitcoin, and the mid-curve, the mid-wit, was macro. I'd love for you to elaborate a bit. What are you getting at here?
Well, and I say that as a macro person. It's kind of the joke, but basically, everybody who's not holding Bitcoin over the past several years is underperforming people that have been holding Bitcoin. And so there's all these really smart people that are like, if you do this, you can capture 200 basis points and convert it to this asset and make this spread happen. And it's like really hard, grinding work. And then just literally people that just hold Bitcoin, and it just goes up over the long arc of time faster than what they're doing. Yeah. And I think that people are overthinking Bitcoin in many ways, like that mid-curve part where they're like, oh, well, what about this, or what about this, or what about this? And it's like, the cool thing about Bitcoin is at the end of the day, there are people that are like, sound money, hard to confiscate, hard to resist it, like I want to own some. That's kind of like the left curve. It's not hard. Then the right curve, you can get into all the technical details, you can get into all like the macro stuff about why Bitcoin is powerful, what it's solving, but people get caught up in the middle and they're still trying to do all these little arbitrage trades or just not looking into Bitcoin. And Bitcoin is it's a cleaner solution to a lot of the things that they're already trying to do.
Yeah, and I mean, you're right, because really so many people, for example, financial advisors will kind of all be talking about their typical 60-40 stocks and bonds, or maybe there's someone who's really into property and they're trying to get some, they're working so hard, and you think how many channels there are where they're talking about, oh, here's how you flip property, or here's how you get passive income. But then, as you were just saying, like you can just hodl Bitcoin, right?
Yeah, and I think 100% allocation doesn't make sense for everyone, right? But I'm quite bullish on Bitcoin. I do hold other assets, but it's funny, the amount of time I spend on those other assets compared to the returns I get from them, compared to, the amount of time I spend on Bitcoin and returns and kind of, just appreciation I get from that is just two different worlds. And so I think that having a Bitcoin slice in your portfolio just smooths a lot of things out. And you can still put your time or energy or other resources in whatever you want, but it just makes it all easier. That's what good money should do.
Yeah. I'd love to turn a little bit to some of the conversations around reserve currencies, reserve assets, and people are talking now about how the US dollar is sort of, are we going into a multipolar world? And another common theory people talk about is Brent Johnson, aka Santiago Capital's theory about the dollar milkshake theory, right? I'm sure, obviously you know that very well. His basic idea is this idea that as people, as the system has a sustained deleveraging event, we would basically see the dollar, or DXY, the index, pump really hard before it's finally replaced by something else, whether that's Bitcoin or maybe in his view he thinks it might be gold. I'm curious your view. Do you agree or disagree, or how would you explain it differently?
So I think there are basically two things that are working at the same time. So one is the existing dollar network. And all the debt that's denominated in dollars is reinforcing that network. That all represents inflexible demand for dollars, which to his point, whenever there's a dollar shortage, people scramble for dollars, or they risk defaulting. And so there's a very strong bid for the base unit of account that most debt is denominated in, which is the dollar. And there are countries gradually trying to de-dollarize. They're holding less of their reserves in dollars. They're holding it either in more illiquid assets, maybe investments, for example, like infrastructure, commodity deposits, things like that. And that around the margin is happening. The hard part is it's very hard for these countries to fully de-dollarize, because let's say, for example, Russia and India want to trade with each other and they want to go around the dollars. Russia's selling oil to India. India's giving them a lot of rupees. Russia eventually accumulates a lot of rupees and they don't know what to do with all those rupees. So the US is special because it has the really big capital markets. You can reinvest a lot into it. It's very liquid. It's very diverse. Whereas a lot of other markets, they accumulate too much, and then they have all these different bilateral trade agreements. They don't have the depths of capital markets. Even the euro, as a shared currency, doesn't really have a shared capital market. So they don't have shared debt markets or shared stock markets. And so it's actually, there's less liquidity, less depth of capital available there. So that's the network effect that's really hard for these other countries to recreate. I think over time, they're chipping away little by little, but it's a very long process, and it's going up against that dollar network. The other factor is now stablecoins, because even at the top level, a lot of people are trying to de-dollarize. At the bottom level, that's not really the case yet. You'll see The central bank's trying to de-dollarize, and the black market for currency in that country is still heavily dollar-based, and stablecoins are another tool to get them there more easily than physical dollars. So I think that all is reinforcing the existing dollar effect. And so I'm less in the dollar milkshake camp, because generally whenever the dollar starts to rise, something breaks and it feeds back into U.S. markets. And the main effect there is that because the U.S. has run such structural trade deficits for so long, the rest of the world has reinvested those dollars into owning U.S. assets. And so whenever there's a dollar shortage, those parts of the world start to sell their U.S. assets. Could be treasuries, could be stocks, could be other things like that. They start to cause a liquidity problem. And that's what triggers the Fed to say, okay, stop selling our stuff. We'll do swap lines. We'll print more base layer money. And so the feedback loops are getting tighter and tighter and tighter as that imbalance keeps growing. And so I think that, during times of credit stress, you'll see a dollar spike. I'm less in the camp that you're going to see a gigantic dollar spike, but I am in the camp that it's going to take quite a while to displace the network effect that is the dollar, largely because of all that global debt that's tied to it.
Interesting. Yeah, I think that's a great way to explain it. So I guess if we're thinking base money, people look at, let's say, the Federal Reserve's balance sheet. What are the assets on there? And of course, the physical cash and coin, right? That's what we're talking about when we talk about base money, or M0. And so Matthew Mashinskas has some really interesting work on this, where he's sort of saying, I think recently he was saying Bitcoin is already number 7, and I think we might have just pipped 6 as well, just beaten the UK pound in terms of base money. Like if you compare Bitcoin versus gold versus all the others, it's already, I think, 6th or 5th in the world. And so I guess, would you say it's just a process of more people learning to save with Bitcoin? Is that kind of the simple grug brain answer?
I think so. That's really the wise left curve view, is just more people hodl, right? I think that there's a natural incentive for people to want to hodl. If you just come up to people in the street and would say, would you like to hold a currency that's growing at 20% supply per year, 5% supply per year, 1% supply per year, trending towards 0, which one would you rather hold, assuming they were all of similar speeds and convenience? You'd want the one that's not inflating away. And so I think, but it's a learning process. There's frictions, there's tax things, there's technical things to learn about. There's a million cryptos grabbing their attention, and JPEGs and things like that. So it takes time to filter through and find the signal. But I think, and over time, once the light clicks and they figure it out, it's so powerful that they generally want to share it, right? So they don't just become Bitcoin holders, they often become Bitcoin advocates. And then they go try to tell their friends, and maybe it doesn't work the first time, but then when Bitcoin doesn't die again and it has another pump and number go up and all these kind of basic stuff, those people come to them and say, hey, remember that Bitcoin thing? I actually want to learn more. And so I think, over time, just the network effect builds. And my colleague Jeff Booth often says, as long as Bitcoin remains decentralized and secure, then XYZ, right? So it's like, as long as there's no tail risk that can otherwise be some sort of kill shot against Bitcoin, I think it's just going to keep accumulating monetary energy and go up that ranking in terms of competing with other base monies. And even if it surpasses the US dollar and gold and base money, it still has a while to go, because when you look at all of the global bond market tied to dollars and all the global M2 tied to dollars, that's still part of the overall network effect that represents demand. And so there's still numbers ahead. There's like another 0 basically ahead of it.
That's a really great point, because as you said, and this again comes into like, what asset are people going to use? Because ultimately there are businesses. There's a ton of businesses right now businesses or even high net worth individuals who keep some of their savings in US government debt, in bonds. And so it's really about that process of them shifting out of that. And obviously, I think, the ETFs and all this stuff, BlackRock and, BlackRock organizing seminars to promote it as well. I'm curious, are you starting to see or hear of these conversations at higher levels yourself, or in terms of like maybe the advocacy work you're doing? Are you starting to see and hear, high level or high net worth people or large institutions get involved?
Yeah, I think we're certainly seeing that. My book was kind of written so that it's palatable to people at that level. It kind of has them as one of the target audiences. Not the only target audience, but it's something that a CEO can give to his other CEO friends, for example. And that's happened a number of times. Large CIOs or CEOs share the book. That's one example. But even outside of my book, just the education that's spreading over time is working its way up to the system. And a key point is that institutions are made of people. And for the past 5+ years, most of those big institutions have people working there that are Bitcoiners, and they just don't have the critical mass to convince enough of their organization. But one thing is, and I keep stressing this point, most people in the world have not seen the Bitcoin logarithmic price chart. They've not seen the higher highs, higher lows, higher lies, and that kind of repeated pattern. Most of us have in the echo chamber. And so instead, what people see is only the prices that they remember. So every time they look at a linear chart, if they even look at the linear chart at all, which still most people probably have not, it always looks like it's in a bubble or a dead bubble, every single time. And when they see the 2017 bubble and then the collapse, and then they see the 2020 bubble and then the collapse, if they see a third rise, it kind of wakes up. It's like, wait, this thing is not dying. I keep thinking it's dead. It's not dying. When people, not just that there has been 3 or 4 resurrections, but when they've actually seen 3 resurrections, that's where I think a lot of things start to change. And especially those higher levels, they're seeing that. They're saying this asset's not going away. It's getting to a macro scale as $1 trillion market cap. The liquidity is there. There's regulatory clarity because that matters for institutions. I think you're seeing more and more normalization of it as an asset to hold, at least as a slice of a portfolio. Maybe they're not full-on maxis yet, but they say, well, if this is increasingly becoming an asset that we want to have a non-zero position in, and when you have hundreds of trillions of capital that starts incrementally doing that, every 1% is a Bitcoin market cap, like what it is now. So I think that is slowly catching on.
Fantastic. Well, everyone check out Lyn's work. I'm subscribed to her newsletter as well, so go and check it out. I'll put the links in the description. Lyn, thank you for joining me.
Thank you.